What's going on, everybody? Welcome to the second episode of the Millionaire Mentality Podcast. I'm your host, Bobby Richardson, and today we're going to talk about how market corrections and bear markets are an opportunity for investors to travel back through time in a DeLorean. And if you don't get that reference, stop making me feel so old. Well, 2022 has come to an end, and I'm sure many of us are happy to put that year in the rear-view mirror. It was a horrendous year for stocks, bonds, and crypto, which all crashed in value, with crypto taking the hardest hit of the three. If you're newer to investing, this may have been your first bear market, and it almost certainly tested your risk tolerance for investing. Or in other words, how did you feel when you were losing money with your investments, and what did you do about it? More seasoned investors who have been to this rodeo before know this is just markets doing what markets will do. They cyclically rise and they fall. And in many ways, how you respond psychologically and emotionally to your investments, rising or falling, is more important than how and where you are physically investing your money. The S&P 500, which is the index that tracks the 500 largest U.S. companies, ended the year 2022 down 18%. And Bitcoin ended the year down a whopping 81%. Many of you have seen your portfolio consistently erode in value throughout 2022 and at some point said enough is enough and sold your investments. But I was doing the exact opposite. As the market continued to fall, I continued to buy. And when the market falls really hard, really fast, and there is max fear and panic, that is when I am buying at my heaviest. And the reason being is that these market meltdowns provide investors with the amazing superpower of the ability to time travel. When COVID first rattled the markets in 2020, the S&P 500 gave investors a heartbreaking Valentine's Day gift and dropped from 3,380 on February 14th to 2,304 on March 20th. This represented a 32% drop in just over a month and was completely nauseating for investors. But this also represented an incredible opportunity to go back in time 3 years and buy the S&P 500 for the same price it was trading at in February 2017. And even with all the fear, uncertainty, and doubt that was swirling around with the new deadly virus, I was throwing a lot of my cash into the markets during this massive crash. In fact, that was the heaviest I had ever invested in my 10-year career of being invested in the market. When everyone is losing their minds and panicking around you is usually when you want to keep your emotions in check as an investor and recognize the opportunity that may be before you. The S&P 500 is currently trading at around 3,850. So even with the big drawdown the S&P 500 saw in 2022, it's still up 67% from those March 2020 lows and was even up 106% at its peak in December 2021. This brings me to the next point I want to make, which is always have cash ready when these big opportunities come. For most, it's best to have a 3 to 6 month emergency fund, which can cover 3 to 6 months of your expenses in the event of a job loss so that you have time to find a new job. If you are able to, beefing up your cash position even beyond this to 12 months of expenses, and especially when cash and high-yield savings accounts are yielding as high of returns as they are right now, thanks to interest rate hikes, is a great way to have that extra savings ready to go when these opportunities do come around. I will continue to consistently dollar cost average into low-cost index funds throughout 2023 and be a time-traveling investor to buy the dips when they come around. These market crashes are no doubt short-term destroyers of wealth and can be very damaging if they come shortly after you decide to retire. But if you are a relatively young investor like me who is in the accumulation of wealth phase of their life, embrace these market crashes and see them not just as short-term destroyers of wealth, but as the long-term wealth-building tools they can be if you act on them. My investing approach is very simple. Just keep buying income-producing assets, buy the dips of these assets heavy, and hold onto them forever to let the compounding effect over time work its magic. It is the simplest and surest path to wealth. All right, that's going to be all for this episode, folks. Have a great rest of your day. As always, stay hungry, and I'll catch you next time.